Good afternoon, everyone. You're all very welcome to today's US market open for the Wednesday, the 24th of September. As we look to the markets today, overall, following our kind of weekly webinar last night, markets has been quite tepid. If we look at equities, for example, we have seen a short-term recovery off of those highlighted zones we alluded to last night. However, markets are very much a holding pattern today. We know we've talked about it last night. Not much in terms of data and really fundamentals today as we look at the calendar. Only a few light events left. We kind of all eyes was geared this week to obviously Swiss National Bank monetary meeting tomorrow with the SNB, and of course GDP and US data prints on Thursday. Thursday really being the better trading day of the week as a whole. And we can see kind of the volume overall has been quite evenly dispersed today, as many assets, particularly in the equity side of things, remains fairly consolidated, fairly tight. So you look at the S&Ps, it's been fairly consolidated, holding that structural value area from Friday and Monday. Obviously, trend is holding up residually fairly well, but we're obviously looking at volume today into the open to see if there's any sort of mediation, retest of lows potentially, or breakout above value highs in the session. Now, of course, similar type of scenario in the NASDAQ. If you were to look at the 30-minute price points from last night, obviously getting that apex move back down. So this was obviously the Thursday and Friday value areas down here, kind of similar to what we talked about with the S&Ps and really evaluating volume. Now, we have seen markets create again a dead cat bounce recovery into that 24/7s, but we trade just narrowly underneath that into the open. So naturally that's going to have eyes. That 24/7 is going to have eyes into the US Open. That 66.75 handle, just shy of 6700s, where we had those highs yesterday, is going to be obviously eyed as well. And of course, as we look at the Dow Jones, we had that aggressive apexing move yesterday all the way back down. Didn't quite come as low as the highlighted zone like we've seen with the other two, but markets is holding quite consolidated today around about that 46,450, 46,500 highs. So where does that leave us for the day? Well, it leaves us with the equity markets being fairly tepid, fairly consolidated, fairly rangy. So even you can see the DAX as well trading between those session lows of September, or monthly lows should I say, down around that 23.3, 23.4 handle, and that midpoint of where we talked about last week around that 23.750. Other than that, the German DAX has been very reactive, very meandering back and forth, and obviously the European equities remain quite tepid. Similar type of scenario with the FTSE as well. Obviously that retest the highs, it's come back down into that 92 handle. We're stuck between that 92 and 92.50 most of last week, but we can see that theme has kind of continued into the early parts of this week. A lot of volume down here in the FTSE, as I said, around that 92.25 handle of where we've had a short breakaway this morning just above. So again, reinforcing that viewpoint of this consolidated approach as we move into Thursday's GDP print in the US. So equities overall, you'd have to actually say, is doing quite well. Bitcoin was quite negative yesterday. We got new lows subsequently during the Asia session this morning at around about 111.5. There was a brief wick. Market has since returned back up into that 113 handle, and of course that is something that we talked about last night. That breakdown, markets stabilizing at that 113, and you'd expect that 113, 113.5 to be pivotal over the next number of days into obviously tomorrow's GDP print, as we've alluded to previously, and of course into those data prints on Friday as well, like the core PCEs. Now, Ethereum, again, like with BTC, aggressive wick down this morning. We've seen obviously a lot of manipulation, liquidations and stuff in the crypto sector over the last 24-48 hours, but we're getting a little bit of a robust recovery. Dead cat bounce back into this value area, similar type of scenario with BTC and of course with Ethereum. And if you were to look at another alternative, Solana, it has gotten down. It's bounced off of that 786 fib on the way down, and is sitting at that 210 level, having seen brief spikes into that 205 print. So obviously that leaves markets quite tepid, as we said. S&Ps, NAS overall quite consolidated, and we're really trying to evaluate that open interest as we move into 2:30 and 3 o'clock, really to see if there's any sort of reinforcement on the session. If not, obviously day traders will obviously try to be proactive as possible, but of course we have to be understanding of the markets and the conditions that are focused on today. Now, if we move across out of equities, the big surprise really today has been the DXY. This was the consolidated region last night. We actually had a short-term break lower but really failed to break below that 97.20 level that we talked about last night. Yes, we did anchor lower, but again, by the middle of Asia session into the European Open, the DXY had moved back up into those highs. Now, structurally speaking, from that open this morning, we've seen that DXY go from 97.40 up into those short-term highs and actually usurping and taking out those previous highs that was established Friday and Monday of this week and last week. So up into the 97.80s we go, and it'll really be interesting now to see if this is the follow through that we get. We talked about it last night, the narrative of it's a pity we didn't get this type of move for this corrective move and phasing higher, but it certainly looks like we're getting a slightly alternative move where you have an inverse, a slightly slanted inverse head and shoulders, but again, really all eyes is going to be on that 98 handle and seeing where the price action can break above it. Aggressive move this morning, and we've seen euro dollar tilt off back to those lows again around the 117.20, 117.30 handles, and we've also seen that cable print break underneath the structural value area of which we talked about last night, and subsequently breaking beneath that into those lower bounds. This 134 handle is in bounds. 117 certainly looks potentially in bounds down here, and of course this would be the retest or tap of that breakout of which we had at the middle of September, so roughly the 11th of September. So really all eyes on the DXY, right? The DXY is going to be critical over the next few days. We've got a lot of news, we've got a lot of fundamentals, we've got GDP figures, we've got a lot of economic data coming out. It's going to be all eyes to see if there is a subsequent bounce. That's a fairly strong, robust recovery today in the DXY, but it's really about seeing, do we actually close higher? We had the similar situation on Friday, aggressive break, we were trading up, we closed back underneath, and we saw subsequent rejection on Monday. So we just have to be very, very cautious of that. But at this point in time, I would actually probably favor now a closure into 98 and a potential move back up into this value area. And as I said, that for me is going to be pivotal over the next, as I said, kind of 6-8 hours to see how does the DXY perform into the US Open at 2:30, which is just coming upon us, and of course into European close and subsequently the US close later tonight. Now, in addition to that, we've also seen the VIX robustly kind of come off that 17 handle. So when we talked about the VIX last night, we were really focused on that 17 print, and in fact I think during last night's Zoom we were looking at the possibilities of it potentially breaking, or would it become more subdued, and we talked about how important this 17 handle is, at least in the short term perspective. We had it on the 21st of August, we had it on the 1st and 2nd of September, and we had it more recently on the way back down the 5th of September, and again last Wednesday on the Fed, getting into that 16.7 handle. So anytime we've recently come into it, we have obviously temporarily broke above it, but we've come back down, and that for me is systematically very important this week to see, does the VIX remain in a consolidated region between these benchmark lows and this short-term high, or do we actually propel ourselves through it and effectively taking out the structural zones? That for me is important. VIX underpins short-term volatility, particularly in terms of any contrarian movements in the likes of the S&Ps, in the likes of the NAS, and some of these risk-denominated assets as well, like crypto. Okay, so 16.4, 16.3 is where we currently sit today, and you can even see yourself as we look at the VIX as well. Impulsive move yesterday, very, very aggressive against that turn off into last night's close, and again moving back down really to where we were yesterday afternoon before we had that spike higher and subsequent move lower. So overall, VIX is holding on off of those highs. The DXY is systematically trying to break higher, should I say, and that's going to be worthy of note into the session. Euro dollar has obviously propelled back into those lows, as to his cable, which has actually subsequently broken those lows. So cable is obviously proving to be weaker than the euro dollar. So fundamentally that's going to be an interesting narrative to look at, particularly as we gauge European and UK data prints for the rest of the week. But as I said, 134 would not be completely impossible today if it's the case this DXY continues to propel higher and attempts to break out that 98 handle. Okay. Other than that, the gold price in the other side of the things, with obviously the dollar moving, haven't seen too much liquidity flowing into any sort of contrarian movement in gold. The only thing I would say is in gold, we had this very aggressive move last week, which we've talked about briefly last night. We've basically had a correctional move and an inside bar with a rejection today on the 4 hour. So for me, that's systematically maybe pointing towards potential shorts, given of course that obviously the 4 hour structure has rejected. So you look at this 1 hour structure, it's come up, it's apexed, and it's sitting at value area. But if we are to systematically break the value area, but more presently break below that 37.60 handle, you'd actually probably expect a little bit of a mean regression and a retracement, because of course what goes up must come back down eventually. So as I said, 4-hour structure is quite clean, particularly as I said, when you see that inside move, rejection, coming back up, rejecting that kind of breakaway or initial crossover in sentiment. So that for me is around here, this 37.75. We're now sitting at that value area. So for me, if we do start to see this slip and slide, we're taking out that 37.60s. We really in theory should be looking for a retracement against some of this impulsive move. And of course that would bode well for the narrative of if this dollar was to pick up strength and move back up into this range, let's say 98, 98.50, well then that would be a catalyst for potentially seeing a short-term retracement on those gold prices from this. Again, similar type of formation, breaks up, aggressive move back to value area, impulsive leg higher, inside bar. Could we get another retrace back down into this previous all-time high, which is, as I said, going to be around that 3,700. So keep an eye on that one. Set your alerts. I'll have one here as well. Just worth keeping an eye to see if price action does break down. More importantly, getting that closure, as I said, into 3 o'clock. That could springboard more selling. And of course, you've got fairly thin volume from Monday, but a lot of the volume last week is going to be down around that 3,700 handle. So worth keeping a close eye on that. I don't trade gold myself personally, but the opportunity is presenting itself for those of you who are potentially watching along as well. So just be mindful of that one. Other than that, not really much else to say today. S&Ps is a holding pattern. You can even see the error bars yourself. Very, very consolidated today. NASDAQ, very, very consolidated. In fact, could we see another regressive move into the lows? Well, I'd kind of favor that. But of course, let's see what happens, because of course you've had that apexing move down, dead cat bounce recovery, retest of potential bottoms around that 24,500, 24,600 could potentially be on the cards if we see a little bit of negativity. But for so far so good. The VIX has abated. It's still holding around that 16.3, 16.4 area following that apex last night. So if you're going to look for more corrective movement in the likes of the S&Ps, in the likes of the NAS, you'd actually expect, or you'd want that VIX curve to actually start picking up a bit more strength and kind of eye another move into that 17 handle. If that doesn't appear, or markets continue to remain fairly consolidated, the likelihood of any sort of downside NASDAQ move will become a little bit more muted and a little bit more contrarian on that approach. But we are seeing a little bit of selling on the open, so it really just becomes destined to see more fruition into that 3 o'clock print, and of course evaluating the price action as we move through the course of the session. So for me, other than that today, not too much else to say. Markets has been quite tepid. Not much in terms of the data front. We've got a few central bank speakers later on. New pending home sales changes is out later on as well at 3 o'clock. There's a few bits and pieces out, not massively on the data front. When we look at the future side of things, the commodities leading the way: coffee, lumber, copper, lean hogs, crude oil, both US, obviously West Texas, and of course Brent in the UK, all leading the way. So soft commodities, and obviously the liquid energy is leading the way. Bitcoin also leading the way as well at 1.36 on futures. But again, on the downside, volatility down, Japanese yen down, platinum, which is a little bit of an interesting one, of course, given that a lot of the commodities are up. But again, if that dollar remains or keeps that kind of short-term headwind stay, you could actually see those metals move lower. So that would be platinum, silver, gold. Watching those very, very closely to see that they extend some of these pre-market and open drawdowns that we're seeing basically on the open. So worth keeping an eye on that one. Other than that, equity markets remaining quite flat. Most are kind of plus or minus 0.25%, showing that markets from an equity based perspective is fairly consolidated as we move into 3 o'clock. Okay, so that, I'm going to leave it there, folks. Just really evaluate pricing. There's a little bit more selling coming through in the NASDAQ as we speak. It's a bit of a contrarian move because the NASDAQ is a little bit down in the open. The Dow is actually holding up at 46.5. So again, not necessarily a clean trading day because of course with the equities being contrarian gives you a bit of a mixed viewpoint. Okay, so again, looking at that into 3 o'clock and seeing, do we see more upside in the VIX, which is initially starting to create itself as we move into 235 today. All right, so guys, have a good day, trade safe, keep an eye on the DXY, keep an eye on the VIX. That'll reevaluate consensus and momentum through the course of the session, and really looking for sustainment, because the last thing you want to be doing is going short now for markets to remain or go back into those prior ranges that we've seen for the last number of trading hours. All right, have a good trading day, everyone. Trade safe.